Hi guys, today we're gonna talk about moving average, convergence, divergence, also known as MACD. This is a very interesting indicator, well-known indicator in the market, but most of the time people don't really know how to use it properly. And since if something is well used in the market and everybody has access to it, most of the time you have bad interpretation about MACD. Now, before we start, let's go ahead by saying that disclaimer: this channel do not intend to replace any trading and coaching programs. It's a deep introduction of the world of crypto trading in general. The series of this channel must not be considered as financial advices. Our content are only here to educate, inform, and entertain. Trading can be very risky. Only risk money you can afford to lose. Okay. As soon as I'm done, because I'm doing the recording and writing the book at the same time, so I can have I'll review the classes and add more example and more content on the book. And if there's something I need to review and correct, I use the book as a way to do that. So obviously there is more information in the books. It will be very available as soon as possible. All right, so let's talk about MACD. MACD is an indicator that uses two exponential moving average. This indicator is used for trend following and in some cases buy and sell signal. Now in my situation, I don't really use MACD as a way to buy and sell, but some traders and some trading style use it as a way to do that. Now MACD is composed of a MACD line, a signal line, a baseline, and a histogram. Okay, so for an example, this is a chart and this is your moving average, convergence, divergence. Okay, so when you put this in a bigger picture, you can change those lines, but usually you won't have to do that. So this, where you have the blue arrow right there, this is your MACD line, this is your signal line, okay, and this is your histogram right there, and this is the baseline. Okay, so like we already mentioned, made out of two moving average. Now usually they use the 12 EMA and the 26 EMA. Some traders, in order to fit their trading style, they can change those MACD into different numbers, but usually the most used in the market, and when you add MACD as an indicator in your chart, this is gonna be the basic setup, the 12 and the 26. Now the signal line is generally designed to make the interpretation smoother. Okay, now generally 9 EMA. The baseline is the zero evaluation point. I think I've shown you this one, and then I'll show you the histogram. Okay, now you can use this for an example. In some shorting system allow you to change those some characteristic of MACD, but some don't. Now on TradingView, and anytime you can use TradingView in any other brokers, because I know if you're using any exchanges or booking system, they can, most of them allow you to use TradingView in their platform. So you can use MACD, and the 1226 is usually the normal, and when you add the simple MACD, SMA oscillator, and SMA signal line, usually you get a MACD that is more sensitive to trend and less sensitive to any fluctuation in the market. So MACD is often described as follow. Then for an example, you heard traders say, I got the MACD 12.26.9, but some traders, they use different MACD. This means 12 EMA, okay, 26 EMA MACD, 9 EMA signal line. Later we will modify this value depending on the trend for better application on trading strategy. That will be in part 3, when we're gonna make lesson about, we're gonna study strategies, different strategies in more detail. So you have some other MACDs that most people probably don't know, the 9.17.9, 12.25.9. Now MACD is, like I said it before, extremely popular, and because of that got a lot of fun teaching about it. Now you probably have heard that when MACD line cross over the signal line, it is a buying signal. You probably have heard that. You probably have heard when MACD line cross under, it's a sell signal. Now if you use this blindly in trading, you are guaranteed to screw up your account big time. Just me, this is not gonna work for you. The reason, MACD, as we saw in the lesson about indicator, lesson 1 or lesson 2, MACD is a lagging indicator, which means MACD crosses, they are always late. You will buy too late or you will sell too late. It is a lagging indicator. Divergence on MACD are less reliable because of the momentum behavior. So you can have a diversion, or you have a fading, and then you cannot use that as a way to expect the next move of the market. It doesn't give you a real odd of the next move in the market. Now, based on the common knowledge, MACD tells you to buy or sell. So this is one of the biggest weakness of MACD. Generally, MACD can only tell you to do two things. Most of the time, and I'm gonna show you to see different characteristics, but most of the time, if the market can go up, down, and sideways, okay, there is no clear indication for this third movement in the market right there. So just like moving average, and probably because MACD is actually made out of some important component of the indicator or moving averages. So just like moving average, MACD has this particular weakness, which is a sideways market. A sideways market. So last but not least, MACD is more effective on monthly data, and I would say monthly and weekly. But if you truly understand the indicator, you can literally use it down to 1 hour time frame. I do it sometime. This is out of swing trading soup, but I use it in 1 hour, 4 hour time frame for particular situation. Okay, now let's go ahead and talk about what you probably don't know. So you probably keep your mind open, forget about everything you know about MACD, because I'm gonna tell you how to use it. You know, the standard 1226 properly, and then maybe some different type of MACD in another video. Now, these are the principles about MACD. You should never use MACD alone. When you associate MACD with other indicator, it can be extremely powerful, but never use it alone. There are very few market interpretation that MACD can give that another indicator cannot do better. That is extremely important. I will say that you should use MACD as a accessory. You know, sometimes, for an example, moving average is not clear, RSI is not clear, or any other indicator that is part of your trading arsenal, Bollinger Band, whatever. Sometimes it's not clear, then MACD can be used as an accessory indicator. MACD is terrible on sideways market, and I think I've told you that, and will multiply signal, force you to take more trade when you should stay away. This can be very deadly. Now MACD crossover are always late. There's no, for an example, you have you have a MACD line. Okay, you have a MACD line. You have a MACD line, and then let's say that you were previously in an uptrend. Okay, you were previously in an uptrend, and then the market have been going up, like, price is going up, and then at a certain moment, at a certain point, the market decide to change direction. So we have a market is going up, and then you have a MACD. It's clear. Now let's put them here for an example, and then the market decide to go down or dive. What you're gonna realize most of the time is that, for an example, if this is your MACD, okay, MACD will probably cross somewhere here. Okay, so at that point we are already down a lot. It doesn't always happen like that, but that is often. Okay, now another situation is that you can have a uptrend, consolidation, and then usually you can get a MACD crosses before. Okay, crosses before that, and then for an example, let's say that was your signal line, and then you have this. So what happened is that after that you have a big dive, something of that kind. So these are the two situations you can get, for an example, on MACD. Okay, now this is one of the things I wanted to point out. Now on a previous or a major uptrend, a signal line will be presented as a cross that you will be, like, for an example, you can say for an example, if you're on a sideways market, MACD will give you the same signal as if it was a sell signal. Now this is a possibility, for an example, but this in case of continuation, this is where MACD will fail you guys, because in case of continuation, let's say that instead of going down, you have a consolidation and then going up. What you're gonna realize is that MACD will crosses back. Okay, something like that. MACD will cross back, and then if you were using MACD as a way to enter a short or sell, then this is how you lose money. Crosses back, for an example, the baseline can be somewhere here, and then you have a histogram, something like that. Okay, and then in this zone right there you get a negative histogram, and then it backs to a positive histogram, something like this. And then if you use MACD as a sell signal, you will have find yourself in a losing trade. See what I mean? So in most situations, sideways market, MACD is actually not very useful, and that's the reason why crosses are always very late most of the time if you decide to use MACD on its own. Now if you use MACD to enter a trade, do not use it to exit. This is a general rule, because since you probably already enter late, so you will exit late, and in worse, you might exit for absolutely no reason. That being said, let's go over the core of this indicator. So we're gonna use three EMAs, the 50, 100 and 200. Sometimes I use the 55, 99, 200 to use our MACD, so you can kind of see or to associate them, since we already we went over moving average in the previous lesson. Now the baseline zero line indicator is the baseline as a positive side. So see if I can show you here. Okay, so this is the baseline, this line in right there, over over the baseline, this is the positive side. As you can see, all the numbers are positive, and under you have histogram, there's a number here and it's negative. So you have a positive sign and then you have a negative side. The bull market, usually MACD line spend more time in the positive side of the histogram. In a bear market, the MACD line spend more time in the negative side. In the sideway market, it is most likely indistinct. So for an example, this is Amazon in a monthly time frame. In a major bull one like this one right there, major bull market, you realize that the histogram spend a lot of time. Every time we are green, the MACD and the signal line spend a lot of time in the positive side of this indicator of the histogram. Even if sometimes you have red in the histogram right there, these red zones are probably sideways market. Okay, so later on I'm gonna tell you a little bit about sideways market. For an example, in an uptrend, you have a red histogram, so histogram turned negative, but we are in an overall uptrend. This is one of the best way to identify correction in the market. You know, like I always say, if you take your time to understand most of these indicators, you will probably have a decent grasp on the market, and then your chart will become more simpler, and then you're gonna use less stuff because you're just gonna go ahead and you look at that, it's clearly an uptrend. So in a bull market, you're gonna have crosses just like that, but we are in a positive side and this is the negative side. The more time we spend in the positive side, we can assume that this is an overall bull trend. Now we're gonna have situation like this, situation like this, and situation like this where you have a negative histogram, but the overall uptrend is still there. Now these are correction zone, most likely correction zone, that you will realize that MACD literally cross back, they cross under, and these are not selling signal. See what I mean? So if you had the same situation but that was a downtrend, then yes, there will have been a situation in which you can look for to enter short position. Okay, so in an uptrend, those bullish signs are more important. If I can say it like that, this is the simplest way to say it. In a bull trend, MACD, bullish signal on MACD are more important, since MACD will give you a bear signal if the market is also sideways. So if you have an overall trend that is bullish, you should care more about bullish signal on MACD and less about bearish signal on MACD, because MACD will use its bearish signal for sideways market and then a real bear reversal. Same will apply in a overall bearish trend. In an overall bearish trend, you should focus more on the bearish signal of MACD than the bullish signal of MACD, because in a bear market, MACD will use his bullish signal in eventual bull rallies that are not real reversal or sideways market. That's the reason why you need to be careful about your trend study. Once your trend study is set, okay, and for an example, let me give you an example. Let's say that, like I tell you, you have a trend study. You studied your trend on a weekly time frame, and then you go on a daily time frame. Okay, let's say you study your trend and it's bullish. That's an example. And then you go in a daily time frame, and then you are using MACD as a way to study the overall tendency of the market, and let's say, or as a way to forecast what you're gonna have in the next few days, that kind of stuff. Now your MACD on a daily time frame tells you that, give you a sell signal. Now we call them sell signal, but we know that's not true. Now this signal, you should not care about it, because the overall trend is bullish, because that sell signal can always be the MACD can also be a sideways. It can actually also mean a reversal. So MACD will use a sell signal to give you two in two situations. If it's a sideways, it gives you a sell signal. If it's a reversal, it will give you a sell signal. Now, the other dangerous thing about MACD is that, let's say that you're gonna have a sideways followed by a reversal. What MACD will do, MACD will go ahead and give you one big sell signal for this entire stuff right there. And that's the reason why, if you are using MACD in your chart, once you get your trend, you focus on the MACD signal that are in the direction of the overall trend, and these signals are extremely powerful. Now, these are the signals that you're gonna use if you are in a position to keep that position open. You know, sometimes when you open a position and it is actually a good position, you're making money out of it, and you'll be like, man, I feel like taking the money, or I might close the money, I might close the position too early. MACD is an indicator that will prevent you from closing your position too early, because as long as you have your green, for an example, you are in a long somewhere here, okay, you are in a long somewhere here, you see this, you don't care about it. You'll be like, well, maybe it's a sideways, or maybe it's a reversal. A few months after that, you get a green. All right, your confidence is boost, you move your stop loss up, and then you wait. Then you turn red again. You don't care about that because the overall market is bullish. Then you wait, and after that turns green again. You move your stop loss, kind of boost your confidence here, move your stop loss here, and then you're gonna wait. Now, this is how you do it. I know it's a lot of information, but like I said, most people are using MACD the wrong way. So let's go ahead and MACD line compared to base. So this is Bitcoin right there, and that was the 2016-2017 bull one that we had here. Now, as you can see here, this is an overall uptrend. See that? And then you have this, for an example, this signal right there. Okay, you see this, you'll be like, well, maybe it's a sideways market, maybe it's actually reversal. But since the overall trend is bullish, and you don't care about this, you disclose this one right there. Okay, and then after that, when MACD turned back green, if your stop loss was there, you move it somewhere here under the cross, because you know that the bull tendency is back on track. Then after that, you got this again. Everybody's shaking, everybody's like, oh my god, this is the situation where you have big panic sell situation, and you have people thinking, is this a reversal? The overall trend is still bullish. We haven't crossed any of these major moving average, for an example, if you are using them as a way to do your trend study. When we get back here, you move those stop loss from here to the base of this wave right there, and you keep doing that. You will probably never close your position too early. Now, you have a cross here, and this cross is actually a real reversal, and as you can see, it's actually a late cross. Okay, because the bear market always start here, and this is somewhere around a few months after the bear market start right there. And this is what I mean by you will probably be late when it comes to using MACD signal. So for me, MACD is more about trend sentiment, or if I can say trend health. Is the trend healthy? So if I'm a bull trend, I say the trend is back on track, it's up and running good. So yes, if I have this and I have a position, I will probably never think about selling. So another one is that in 2016, 2014, 26. Now this is a little bit confusing, because as you can see, you have all these back and forth. This is a sideways market, okay, and between 2014 and 2016, we had somewhere here there was a bear on Bitcoin right there, and as you can see, this signal tells you a little bit more about the sentiment of the bear, is it healthy or not? But if I use a 55.99 as a way to study my trend study, you realize that you will disclose all this signal right there and wait for here. Here you have a clear reversal of the trend somewhere here, and then this signal is important for you. I don't know if you get that, but you can just go ahead and review, pause and go over this again, and you will get the point. Now, is another one, and this is more recent. You have MACD, and this is the bear market of 2018. So the bear market starts somewhere here at this zone right there. I think I pointed down here right there. And then let's say that you have seen signal, because there's many other indicator that will give you signal way before it's hot. For an example, RSI, for an example, some important trend line. You will get this. And then you start seeing those signal. For example, you have a bear signal on RSI, check. Bear signal on a trend line, check. Okay. And then you start having major overturn. For an example, 21 moving average crossover on weekly or monthly time frame. These are big bearish signal. But when you get this cross, now you decide that the market is bearish, for an example. Okay, but we're still green here. But when this thing turn across under on a MACD, on a histogram, this is how you know to keep your short open as long as the thing is red. Now you see this, okay? The market is overall still bearish. You disclose this done right there and you wait. The market is still bearish this entire thing. See that this is a sideways zone. That was a very long sideways on the 2018 bear market. On Bitcoin, this is a sideways. You're gonna disclose all these buying signal because the market is overall bearish, and bearish signal on MACD in overall bear market can be used. MACD will use it for a reversal or a sideways. So you disclose all this information, then you get a new cross under. You keep your short all the way to this zone right there. Now, at that point, you probably will have disclosed this. Okay, but I'm pretty sure that you will have move your stop loss from here to somewhere here, and this is where you will have get stopped out. I did the exact same thing with an Ethereum position on now we are 2021, and I did the exact same thing, and that's how I know to wait for a big reversal. So at that point, you will probably have extreme RSI oversold, divergences, and then you start having a bunch of bull signal, and then you get this one right there. You probably start accumulate at that zone right there. Now let's just go ahead and review that again, because that's a very nice example. You have a bear market that start here. Okay, let's say you start opening a little bit of small short here and there, and then you have a clear bear market. Then on a weekly time frame, you have that MACD cross under. That tells you that we are definitely in a bear sentiment. Now the bear sentiment is fully in control. Now since we're in a bear market, you have this buying signal, quote unquote buying signal, but we're still in bear market right there. You will have keep your short open. Your stop loss is probably here. Keep your short open, but when we cross back here, then the bear, they just get back and take control again. Then you move your stop loss from here to here, and then wait. You wait. Okay, so later on we're gonna use other indicators to identify those swing properly. And then when you start having those signal, and then the MACD came and support your theory of reversal, that's how you know to keep that position open and let the position put money in your pocket. All right, so another example, because technical analysis is extremely visual. This is MACD line crossover, that's Amazon, and this is two bear market right there. All right, so we had this right there. You probably use other indicator to identify this swing. You have a swing here, you have a swing here, and that was one here. This bear market, it was more into housing. It was more housing market here. Now in other indicator, for example, like I say, RSI and everything, you will probably use a way to enter here. Okay, but if you were in a short here, you know to keep your short open as long as this thing is there. Okay, you identify the swing in other indicator. Once you confirm it, then you enter. Let's say that you enter a long position here. Okay, then you use MACD as a way to maintain your position and wait. You maintain your position and wait. When you get your MACD cross under here, that's a quote-unquote selling signal. You wait because it's still overall bullish. There's other way to see that. I'll give you more lesson about that. Then when you get this thing right there, that's how you know to go ahead and move your stop loss somewhere here. You get this swing right there, move your stop loss somewhere here. Okay, now this is the situation. You probably get stopped out, but you will have final other indication to re-enter the trend because the trend is still overall bullish. Okay, so you see this, you move your stop loss somewhere here and then wait, and then you keep riding that stuff. Now here, this example is a little bit not on point because we did have a crisis, we did have a bear market, but it was in a different field. For an example, when you have a bear market in a housing market, it affects more the housing market than tech market. But this was the most important point about this chart, and this was the dot-com. That was the dot-com bubble. Sorry, dot-com. All right, guys. Now, from what we saw so far, we must be clear about the fact that MACD, any MACD baseline crossover must be taken seriously in the weekly time frame or hour time frame. In a sense that here, as you can see, if you spend more time in a positive sign, this is most likely a positive. It's most likely a bull market. If we spend most time in a negative sign, it is most likely a bear market. But as I told you, these signals are extremely late. But when they are there, they tells you about the health of the overall trend. They kind of back up the overall trend. So let's leave sideways market aside for now. If you choose to put MACD in a trading strategy, you will, I promise to show you sideways market criteria. We probably cover a lot of them already. Okay, now on the weekly time frame or higher, a MACD baseline crossover is definitely not enough to enter a trade. Like I said, you will always be late anyway. You use other indicator you use other indicator to tell you to open a trade, but MACD for me is a way to tell the health of the overall trend. Now when it happens while you are in an open trade, you must take a decision. Okay, stay in the trade if it's in the same direction. That's how you confirm. Close the position if it turns against you. Now this is, like I said, you're probably wrong if you close the position if it turns against you, because if the overall trend, when MACD gives you a signal that is against the overall trends, it can also be a sideways market. It happens a lot. Now the signal line is never the first to cross the baseline, so usually there is no need to take decision because of that signal line. Now the histogram, we did go over that too in the MACD component. It tells you a lot about the MACD, the market enthusiasm about the trend or health of the trend is generally made of column, and it tells you two important elements. Now this, I didn't tell you this, the intensity or persistency of the histogram. This is how you use histogram to detect eventual diversion. That's an example. For an example, this column right there, you know, how many you have back to back tells you about the persistency, you know, of the trend. So you have a I'll say not trend but sentiment. It's more sentiment thing, okay? But how deep is this, or how high this thing is, you know, tells you about the intensity of that particular sentiment. Okay, so when you have two, for an example, this first wave was a little bit deeper than this one, you know that the bear sentiment here was more intense than this bear sentiment here. Same situation here. You have this column right there is very intense, but this is a little bit higher. So you would say that the bear sentiment here is more the bull sentiment here is more intense, and after that you have a bull sentiment here. These columns are taller, so this bull sentiment here is more intense than someone here. Later on, you have another situation in which you have another bullish sentiment, and this is clearly less intense and less persistent than this one. Now you see this, they give you clue about the overall market health and trend. So when you see this, these are called divergence. When the intensity is losing steam, you get less intense and less persistence MACD histogram. That tells you a little bit more. And then that's how you have an example. This is a bullish sentiment that persists a lot over time, more persistent than this one. Now, you tend to have more intense wave on bear market and more persistent wave on bull market. It's a general. It's just because those two situations in the market are lead by different type of sentiment, because it's mainly fear in the bear market and it's mostly greed in a bull market. So MACD can definitely help a trader understand the market enthusiasm. Sets of column is the surge of trader enthusiasm. You have the length that tells the length of the columns that tells you about the intensity of the trader sentiment. Number of columns that you get back to back, you know, they tells you about the persistency. I think I've told you that. So in the histogram, column are in the positive side of the baseline, so the trader sentiment are bullish. If the columns are in the negative side of the baseline, the trader sentiment are bearish. The price action can perfectly go against the trader sentiment. It is often a form of divergence. So you have divergence when you have intensity and persistency that is less than the previous one, but you also have situation in which the price action is going against the histogram. It is actually a big diversion. Now, price is still going up while histogram is red. That's an example. Okay, the price is going up, histogram is red. Okay, so we are in an overall bull trend. All right, guys, we are in an overall bull trend, and as you can see, these are sideways situation. Let me show you here. This zone right there, this zone right there. These are sideways, clear. These are clear sideways situation. But in the MACD, you have selling signal. This situation, you don't sell them because you're gonna have to wait, you know, for other indication. For an example, that RSI right there, that RSI diversion is another indication. Now, when you're gonna have a reversal, whether from bullish to bearish or bearish to bullish, you have a set of signal. They come back to all together. It can still fail, but usually that's it. So this next cross probably can be a major correction or literally a reversal. Major correction probably. So an uptrend right there, this is probably a big time frame. That's definitely the monthly. So the bear market ends somewhere here. Okay, you have some buying signal somewhere here, but when in the monthly time frame, you have this cross. this is definitely a situation in which you keep your position open. So that's the reason why traders, after, I think this one right there was March 2020, they saw this and they don't really care because the overall trend was bullish, and MACD tells them to keep the position open. So somewhere here you could have get Bitcoin at 4K, and this bull run actually lead Bitcoin all the way up to $60,000. This entire thing will have tell you to keep the position open. Now this will tell you the position to keep the position open, but when we're gonna have a reversal, MACD is terrible. You see what I mean? Tells you about the sentiment, the persistency of the intensity of the sentiment, but when it's changed, when you get a reversal just like the one here, MACD is literally late. Okay, but when it's there, you have to pay attention. Now, like I said, the longer the columns, the more intense market sentiment. Short columns, less intense market sentiment. An example, correlation between price action and histogram intensity. So I did show you, but I didn't show you about this thing right there. So that was a sideway. This entire block is a sideway movement. And then you have the most important thing right there is that this is clearly a bear market. Okay, it was no. So you have a bear. Sorry guys, you have bear here, and then this right there is a sideway market. So you have a move from the bear to the sideway, different trend. Okay, but the 200 moving average is probably somewhere here, and sorry, it's probably somewhere here. But as you can see, those zone, you will have disclosed this zone. Okay, so you have this signal right there. This is a bear that turned into a sideway market that will eventually give you a continuation. This is a continuation somewhere here. But what you're gonna realize is that in a bear market, you don't really care about those bullish signals. They are probably small rallies, then they are lit anyway. But the interesting thing is that those rallies, as you can see, they get smaller and smaller and smaller over time. That's how you know that whatever bullish sentiment is pushing the price, and this sideways movement is losing over time, and that's how you have a major drop somewhere here from $7K to $3,000 and something like that, and all of a sudden you get a intense signal here. The MACD signal is there. I know traders who did open massive short here. They saw these bullish signal getting less intense and less persistent. The overall market was bearish. Then they saw this right there. They increased the size of their short, and that's how you get this big drop right there. Okay, the overall, let me say that again, the overall market was bearish. We moved from a bearish to a sideways movement, and then we start having a bunch of rallies that usually are part of a sideways market right after a bearish movement. And then you realize those rallies are getting smaller, and then at some point the bear will take over because the entire bear signal is there. When you have that cross, you are in this situation right there. The cross happened somewhere here. Okay, they did increase their short position and take advantage of this massive drop right there. As another thing, the histogram column can also have cumulative and degenerative effect on over time. So I'm gonna have example, but the point here is that if you have a MACD histogram like this, okay, and the next one is bigger, the trend that lead this one is getting bigger, probably something way bigger than that. Something is building. This is where MACD can be a game changer when you are managing a swing, a position that is open, or when you're studying the trend. Okay, the degenerative side of it is when you have many histogram surge, but they get smaller each time. By smaller, I mean less intense or less persistent. Now this indicates that the sentiment behind the previous surge is fading, which means degenerate, but often with the generative of the small surge, the market persists on the same direction. So you're losing steam, but we still go in the same direction. This situation, they create divergence, often announce an upcoming brutal correction. This is probably what we saw here. And a traders that know how to use MACD, that's how you study here. This is the degenerative situation here. Yeah. So I didn't have to put another shot because I know it's the same situation here. So these rallies, they are not important because we are in an overall bear. So these rallies are getting weaker and weaker and weaker. So this is a degenerative situation, and then this is telling you that at some point the break will be a breakdown, and use this as a way to enter a short position. Now in this class or swing trading overall, we use MACD as a way to do trend study, mainly in the weekly time frame. Like I told you, you see a MACD crossover in a weekly time frame, you pay attention to that because this is extremely important. The market sentiment on a daily time frame, so because that can those sentiment can persist for weeks. Okay, you have MACD crossover on daily time frame, kind of tells you what to expect for the week, but the trend is extremely important on a weekly time frame, and sometimes entry and exit in 4-hour time frame, especially for position management. So am I gonna increase my position or reduce my position? I used it in a 4-hour time frame. Now nothing really new, just different methodology, 3 different time frame, same indicator, different wall. So MACD in a major bull market, MACD in a major bear market, and MACD in a sideways movement. Now MACD in a bull market, our goal is to enter long position, and only, I should say only, we do not short bull market, just like we do not go long on bear market. We are swingers, which means that our plan is to keep our position open overnight for weeks and sometimes for a month. So we have to be in the direction of the trend. Even this is important. This is the most important thing about this entire trading style. So we are going to use just one example to keep the video short. I mean, the video is already very long, and they are more on the workbook that I'm getting prepared. Like I said, after I do the video, I had more content on the books for more example. Okay, MACD in the bull market, Bitcoin turned bullish on the weekly, and the next picture here. So that was a bear market, and this is where on a weekly time frame you're gonna say, well, okay, we bounce over the 200 moving average here. So this is a very important swing. At some point here you have a crossover. This is a major confirmation of a bull. Okay, but this candle and these two candles right there, they would have clearly tell you that, well, this is it, this is a bull market. Probably some other indicator, or I would have tell you, we are getting close to the bottom, but this is clear right there, and you have a set of bullish signal. Then you have that MACD crossover. This is where you enter a long position, with reserve, of course. But when you keep accumulating bullish signal after bullish signal after bullish signal, then you're still in a healthy situation. Well, you go ahead and you keep your position open. You see this thing right there, you know that, well, it's either a reversal or a sideways market. Nothing interesting. We're gonna disclose this as a way to increase our position. But when you see this one right there, your stop loss probably was there. You move it somewhere here, and then you add to the position. Same situation here, and that's how you write a position. That's how you write a position using MACD. That was November 2016. There's a list of all the bullish signal on previous chart. MACD line in the positive side compared to the baseline. As you can see, we move from negative side of the MACD line and move it there. So that's the negative side of the histogram. That's the positive side of the histogram. You know, these are accumulation of bullish signal. You have MACD line crossover is a signal line. This one right there, MACD line crossover. Just to make sure I go over everything. And you have candlestick successfully open and close over the 200 moving average, then a 50 and 100 EMA cross back. So we successfully go back over here, and then after that we follow by a cross. You know, they go over that. Now this is a big time frame, and this is a clear bull market. You see something like that in a weekly time frame, or the inverse. You see this happen in some from bull to bear. You gotta pay attention. That's a reversal of the trend. Now we need to enter. The white vertical line is to delimit the new trend. Okay, so we use this as a way to say, you know what, this is it. We have a reversal that happened here, and this is where you're gonna go ahead and look for a big ride for the long. Okay, at that point most people are not buying, trust me. Same thing for bear market. At that point, if you buy, be like, this is not a reversal. So at this point we must switch to the daily time frame. Now we are here. Okay, this is the same chart. It's an example of how we proceed. Okay, so at this point we are in we move. This is the weekly time frame. We move down to the daily time frame, like I said, and look for opportunity. This is nothing new. I've told you this is exactly what we're gonna do. Our action are very planned in the market. We are swingers, remember. So because we must buy on retracement, this is important. Buy on retracement because this is a bullish market. From the moment the trend was confirmed, we are going to identify MACD cross under the signal line and mark the zone. So we're in a daily time frame, same situation, same zone. So we have a MACD cross under, but this is a daily time frame, right? Daily time frame MACD cross under. So we know that this can be a sideway or an eventual reversal, but the weekly is bullish. Overall market is bullish. We are in a overall bullish market. Remember, you know, early 2015, something like that. Then on a daily time frame, we have this situation where the bulls sentiment get back on a weekly time frame. That will be an interesting zone to look for an entry. 1 hour, 4 hour time frame, and that's probably what we're gonna do. You see this? If you practice for 2 years, this should be not scary at all. 4 hour time frame, you have a downtrend line. Now this is what I mean by time frame in which you take action. So 4 hour, 1 hour time frame, when you go a little bit lower, since you are clear about the trend and you are clear about where you're gonna look for entry, those opportunities that you're gonna look for those opportunity in a 1 hour time frame, 4 hour time frame, and look for interesting entry. Now for an example, this is an interesting potential downtrend line. We cross over it, probably use your Fibonacci tool and take this swing right there. Okay, all this back and forth, they will not scare you because the overall trend is backing up is backing up your position. You know that you're gonna keep that thing open. You just know. Okay, so this green box is the same here. You just know that you need to enter. These are entry point. These are entry windows. So you're gonna have more entry point in the 4 hour time frame, since you confirm the zone that you're gonna look for an entry point. So what happened after this trade is 599% profit. This is the same green box. You see this green box right there? Those zone. Let me show you. You identify in a weekly time frame. You get your trend here. Trend is set up here. Okay, All right, sentiment is clear here. You know, people are really into buying, at least major pair. You set up your zone. This is the green box. We go on a lower time frame, look for any indication to enter a trade 4-hour time frame, and when you're back in a big picture monthly time frame, you will have entered here and wisely tank all the way down here. Just a clear 500 something $19,000 profit. Insane, right? You can keep doing this in both direction market. Now remember that we will not use MACD to exit because probably gonna be too late somewhere here, but you will have get the same situation or different type of sets of bear signal to exit the trade at some point. Now pay attention to the fact that we did have MACD cross back, but they were totally disrespected by the EMAs. The overall trend was always bullish. These are your famous sideways movement, and you don't care about them. There's way to trade sideways, but we are swingers. We're not gonna get into the detail, you know. So MACD line stay over the baseline, but cross under the signal on a major bull market. We have back and forth, you know, signal doing those back and forth. We don't care about them. Histogram is going against the trend. We don't care about them because as long as the weekly and the monthly time frame is telling you that about the main overall trend, we just keep riding. If you had a long position, you might need to reduce. That is up to you, honestly, you know, your financial goal in the trade in itself, but you don't have to, you know. Sometimes I don't. Most of the time I just let my stop loss take care of that, you know. I prefer let my stop loss close the position, you know. If you don't have any position, you might need to stay away or look for an entry, I would say, or look for entry. Okay, now MACD in a bear market, a different situation. The goal here is to sell short. Remember, once we get the trend, so the reason why we do things like that is that people will lose money 70 to 90% of the time because they are against the trend. So if we are in a bull market, we only go long. If we are in a bear market, we only short. That reduces our probability of losing a trade insanely. So I haven't lost a trade for years just by respecting this simple rule. It doesn't matter what we're doing, it doesn't matter, or I just don't do that, you know. It's a bull market, I don't short. It's a bear market, I don't buy, period. So we're gonna look for bear rallies. Like I mentioned in part 1, bear rallies is movement in bear market. If we go up in a bull market, they are called bull run. In a bear market, they are called rally. They are named rally. So we need a clear confirmed bear trend on the trend sturdy time frame. Clear confirmed bear trend on the trend sturdy time frame, and then we need a trade opportunity on the T time frame, generally daily, and then we're gonna sell short entry or exit on a time frame which is usually the 4-hour or the 1 hour, and then let's go to work. Now Ethereum do not have enough data to generate the 200 moving average, maybe, you know, for this particular shot for the weekly time frame, so we are going to use a lower EMA. Okay, so you will be right about in any interpretation when MACD and several indicators are pointing toward the same direction. Now this is extremely important, you know. Sometimes people are talking, you know, there's always media attention, that kind of stuff, but when MACD, which is very lacking, is telling the same thing as other indicator, I just sit down and let those indicators back up my position. So that will be 2018. Okay, okay, 2018, something like that. Now this right there is an uptrend line and a weekly uptrend line. Okay, you have across this candle, now if you see it, this candle right there is extremely important. Now these two candles are extremely in favor of a bear market. We close on the 21, this is weekly. The fact that we close under the 9 here for me will have been a reason to reduce already, but this is extremely non-negotiable. This is extremely important. So you have bear signal, you got one signal, okay, and then we retest this here and we stay over it. That's another bear signal. You know, every time I see this, I start opening tiny shorts somewhere here, and then right there, look at that. You know, your bearish start, your big bearish signal start somewhere here. You know, probably some diversion, daily time frame, that kind of stuff. This thing right there is bearish because we literally stay under the 9. This is bearish. We are in a weekly time frame, guys. This is massively bearish, and then this is the first rally. You know, we bounced from, I think it was $600, and this is an interesting zone to short. So you open a short here. MACD is unbelievably red. There's no need to do anything. Okay, now at some point here it crosses back, but the entire trend is still bearish. So here maybe we just the short, but the moment you get that thing here, you just add to it, and then we keep ride that thing all the way down. I think this bottom was $99. I know this price because Ethereum is one of my go-to when it comes to bull market. So that was $99. That was an interesting. This reversal happened right in front of me. I saw it. This one happened right in front of me, and this thing also happened right in front of me. All these big swings, I saw them happen like in real time, since I watch the short every day. So from now we are going to move on our time frame where we look for opportunities. Okay, so this is daily time frame. This is the same situation. You see all these indication, all these technical analysis, and that's the reason why I'll tell you guys, we move from bigger time frame to lower time frame, and the colors are extremely important. Now this trend line right there got violated. See that? 1 1 2 3, and then that's a confirmed uptrend line. We broke here, so we are clearly about, we know for sure this is a bear market. Now that's a bull, that's a bear rally here. When we touch this zone right there, that will be an indication for you to enter a short. You know, probably already enter short here, but this is clearly one. So when you see this, you pay attention to this thing, because this is probably a rally. This is not an indication to enter a long position. Just look for a situation to short, and this is where you would have shorted, somewhere here. Now I want you to pay attention to this box right there. See this green box? Pay attention to this box. The reason why I want you to pay attention to this box, because of this moving average fanning. When all the moving average are spreading in the same direction, this is extremely powerful. Cut. Now I see this fanning right there. I'm looking for a situation to enter a short here. So you have one opening here for a short using different indicator, different style. One here using the retest of this downtrend line, and another here because you have that fanning. So technically, if you've been shorting during this entire year, you will have take 2 major short. That's enough trade to make a lot of money, because all these short, they will add up and then increase your profit insanely. So you see this fading. We are in a daily time frame looking for opportunity. Now we're gonna look for entry. We go, like I said, pay attention to this box, and then look at your short. You have a rally, and then you short here, bam. Another one, and then you short here, bam. One more. So this is your green box, right? Pay attention to this one. This is your green box. Look at that short. Okay, this is your short situation, from $600 down to somewhere around $99. I know this because the like I said, this thing happened right in front of me. So MACD is in sideways market. Good time to set a small phone apart to scalp. I do that a lot because in sideways market you have a range, and then we stay in the range until we go over the range, okay, or we go under the range. So there's no real swing opportunity during those moments. It's a good time to set small account scalping, day trading experience. You can build up your day trading experience. I strongly recommend that you scalp and day trade during sideways movement, just for learning, you know, learning. But do not expect miracle to happen here. There's no real swing. Okay, now so far, resume. Let's go over this. Discipline in color selection will help you master the inter time frame value of your technical analysis. I am probably the first to tell you this, to use this inter time frame value. So, you know, if you use this in other class, if you use in my material, I would appreciate the credit. But we did insist in respecting the colors because we give them a sense, and it is like a language. So we can literally take an interpretation and go all the way down to a lower time frame and bring that interpretation to a lower time frame. That kind of help us see what's going on in detail, and by keeping the big picture in our mind. Okay, just like we did using those line for an example. Like I said, this one right there, we took it from the weekly time frame, and we move it all the way down to the 4 hour, to the daily time frame. So give us those opportunity here. Okay, so but we did insist in, like I said, respect them, the colors. You can have your own colors, doesn't matter, but you don't have to copy mine. All right. This is it for this class. It's a full 1 hour. I know there's a lot of information. You probably need to go over it more than once. And as a disclaimer, this channel do not intend to replace any trading coaching program. It's a deep introduction of the world of trading, crypto trading, and stock technical analysis overall. The series of this channel must not be considered as financial advice. Our content are only here to educate, inform, and entertain. Trading can be very risky. On only risk money you can afford to. So that's it for moving average, conversions, divergence. I know that's a lot of information, but trust me guys, we just getting started. In the lesson 5, we're gonna talk about Elliott wave basics, and then after that we're gonna move to Fibonacci, RSI, Bollinger Band, that kind of stuff. The way that I adjust the classes is because I know that you're gonna use the previous information to understand what's coming after that. So you will have not really understand moving average, conversion, divergence if you don't really know what is moving average in itself. So your understanding of moving average tells you a little bit more about how to approach MACD. And that's the reason why it's important to have a basic about Elliott wave before we move into Fibonacci trading and before we move into RSI. So next lesson is Elliott wave. All right guys, take care. I'll take your comment, question. If this was helpful, remember to subscribe and give us a like. And all my trades are in virtual backend for cryptocurrency. I'll put the link where you can join me personally in my Discord channel. I am usually very responsive. Alright guys, take care and have a good one.